Good afternoon, ladies and gentlemen. Matt Leschber once again with 1836 Property Management in beautiful Austin, Texas. We've got some really interesting stats for you now. It is the beginning of 2022, and every year we start accumulating a little bit more and more data. And that data tells us what's working, what's not working, and also how to direct our clients so that they may reach their goals faster and more effectively. It's not just about tenants, toilets, and troubles. It's really about you guys and your goals. Why are you investing? What's your timeline? What's your expected rate of return? And how do we get you there faster with proven methods than anyone else? So let's dig into some of these for 2021 now that it is 2022. You should be able to see a chart which has showings versus days on market. This is across our entire portfolio, which is closing in on about 700 units, and it is for an entire year broken down by month. Now, what's interesting about this is that we wanted to find out how many showings does it take to result in a closed lease. So how many days on market is it taking you? And when we do our Tuesday updates for all of our owners that have active properties, we let them know any suggestions for the property, like condition, price, anything like that, how many showings there's been, and how many applications there's been. And then we look at how many days on market. And we make recommendations just about all the time to make some sort of change because time is the biggest problem. Time is money in this game. So we want those properties leased rapidly. As we go down this, you're going to see that you've got some great stats for each month. These are also averages, and every situation is different. So the number of showings on average was about 5.86. That was across the entire year. You can see there's a dramatic shift in some of these months. And the average number of days on market was only 12.3. Now, why is it 12.3? What's the MLS average? And we track that internally day by day to make sure that we're staying up with that. But the key to this is you have to bring a property to the market that is ready for a tenant who is going to respect that property and appreciate it. It's got to be hotel room ready. That's the quote that we've got. We stole that from one of our buddies in San Antonio years ago, but it is the truth. If you bring a property to market that's in shambles, you're not going to get the rate you want. You're going to get bad tenants who accept that property, and you're going to have a lawsuit in your hands when they move in and find out that the things weren't the way they thought they should have been, whether you agreed to them or not. So what factors go into this data? The time of the year. Obviously, the peak season is probably, March, April, May, June, July. Things start slowing down a little bit in August. And then, of course, in the Christmas time, everything is slow. Also, the conditional location, rental rate, all those were big factors. So I know that we have some owners that come to us and go, what should we do? Some owners come to us and go, what do you do? Some owners come to us and go, let me tell you what to do. If you're not in this business and you haven't run the numbers, you don't really know what to do. It's like going to your dentist and telling them how to drill. Don't do it. It's going to turn out poorly. So personally, for my portfolio and a lot of their PMs, I keep my rental rates right at about $50 below market. Now, we've got another stat, another video that's going to come out for you, but on our Tuesday updates, we actually plotted this on a grid so that we could see if you were below market, 150, or at market or above market. What does that mean in time? And then that holding cost. And we found out that, as kind of our gut told us, that being just below means that if your property is ready and someone is seeking a property, yours looks like the gem in the rough. And so they take it quickly. And that gets you cash flowing. So that time sitting on the market waiting and hoping for $50 more actually cost you about $100 a month. So it's counterproductive. Outside factors that affected the data was economics and government changes, supply chain disruption, labor shortages. I got to tell you guys, the make-readies in Austin were bad in 2020. They were even worse in 2021. And even with this Christmas break, people just said, stop sending us business. We're going on break. We're burned out and we're not doing it. So call us in the new year. I mean, a lot of vendors. We had very few that weren't plumbing or electrical that even took calls during the break. COVID eviction moratoriums, those definitely affected everything. And the Austin real estate market, huge demand, low inventory, and everything is going up. Keep in mind that rental rates do lag the market. They don't lead the market. And why our data differs from the MLS, we also use effective, high-quality marketing. We have written tenant screening procedures and make-ready processes, and a lot of properties out on the market may be ready, may not, most aren't, and they don't know how to process those tenants properly and get the workflows done so that you can gather those applications and process them quickly before they move on. So if this interests you, you like more stats like this, hey, we've got a lot for you because this is how you're supposed to run the business. Check out our statistics page at 1836propertymanagement.com/statistics. And we'll be back with some more next month, as well as some other videos coming up soon. Have a great 2022. We're looking forward to working with you.